Hello, this is Mike Swanson. I run the website WallStreetWindow.com. The odds are you're watching this video because you're on my email list. Got an email about it. Now, if you're not on that list, you need to get on it and get my free stock trading updates before the opening bell. It's in the description in the video. Now, there is a battle going on between stock market bulls and stock market bears. You saw it, or you're seeing it play out this week in the markets. The Dow got hit for 600-point drop on Wednesday. This morning, it's down a little bit. Of course, it's been going up this past couple weeks, really, since the end of October. And but it's more than just the price action. It's an argument playing out on social media. Should those that are now bullish on the market be trusted? And what about the doubts that people have over what they're saying? I'm going to address that in this video. And an even bigger question that I think is even more important that we're going to get to. But the battle is what everyone is focused on now. And I'm going to show you where I stand on it and the arguments that are happening from the other side. All right, I was a bear last year, really became a bear in 2021 in the summer. I sold, went to a 50-50 allocation in the summer of 2021 because of this chart that shows the percentage of stocks above their 200-day moving averages trading in the U.S. stock market, not just in the NASDAQ, not just the S&P, the whole market. And that was going down. Stocks were falling while the averages continued to act well. A huge warning that always leads to a violent correction or a bear market. And it happened, obviously, in 2022. But a few weeks ago, I noticed that this indicator actually turned up in October. While the market continued down for another month, this indicator formed a positive divergence. And ever since, there's been more strength inside the stock market than is apparent in the NASDAQ and the popular stocks such as Tesla, Apple, NVIDIA, Google, and so forth. This makes me bullish on the market. And then after noticing this, writing about it, I think I may have mentioned it in a video, I found something interesting, and that is a article that I shared on Sunday in a video and on my website by a gentleman named Walter Deemer. And he looked at some similar stuff. I was talking about stock market internals. He was talking about stock market internals too. And what he found was a rare explosion, what he calls a breath thrust. It's really the advancers and decliners over a 10-day period. Breakaway momentum is what he was calling it. And he found that the way the market was trading only happened 24 previous times, and every single time it's led to powerful rallies. Only once was the market down 12 months later, with the average gain being 20%. Now, that's the bull argument, and I believe in it so much that I came into the year like 50% invested. I did a lot of buying in October, November, and I increased that allocation because of the internals of the market. Before I read this Walter Deemer article, frankly, and I talked about in this video, consumer stocks, REITs, coal stocks, material stocks. These are the things I bought in January. Last year, I was buying gold, ETFs, mining stocks, material stocks, foreign stocks, foreign markets. But here's the thing. There is doubt about whether this is valid or not. So I would say Walter Deemer is in the bull camp. I'm now in the bull camp, but there are a lot of bears out there doubting this. And I just want to show you their arguments, and then we'll talk about them. So here's an update. Walter Deemer said, oh, because the market pulled back Wednesday, he went back and looked, can a pullback happen after this powerful breadth thrust buy signal? He found, yeah, actually, pullbacks of 2 to 5% typically do happen, and then things end up going back up. So that's what he found, and people just don't believe it. That are replying to him on Twitter. And here's an example. This guy links to a chart, and he says, until the S&P 500 closes convincingly over the last peak of 4080, which happened on November 30th, the downtrend continues. Trend is not bullish. It is still below the last market high. It's that simple. That's what he says. Big rallies are common in bear markets. And this is true. When we saw such rallies last year, how many did we see go up to the 200-day moving average or the downtrend resistance line and fail? The difference is none of those rallies happen with the internals doing what they're doing now and this breadth thrust of having taken place. But they want confirmation. They want the previous high set in November taken out before they'll believe it. And here's someone else basically saying the same basic thing, drawing the trend line. And basically we haven't closed above the trend line yet, and we took a hit off of it. And how many times do we see, that happen last year? Over and over and over again. Not only that, but the daily stochastics oscillator indicator on the top of this chart went above 80 to give an overbought reading, and then crossed below 80 on today to give a sell signal. So we have a sell signal in this indicator, and you can see the 1, 2, 3, 4, 5, 6 such sell signals we got last year, and almost all of them, the market ended up going down for at least a week. Now, the one that happened in December, the market did not make new lows, obviously. The one that but it still dipped. The one in February, it was bad. These sell signals were serious times to sell. So we got a sell signal. But the thing is, when the markets transition, these sell signals don't mean anything. So if you just look at the S&P 500, which is frankly what all these people are doing, they're looking at the daily price action. And frankly, we'll talk about the big caps in a second, but like this guy, this will first test 3850 on S&P 500. Well, that's a little bit lower from here. That's the trend line on the bottom I've drawn. So the people, they're hearing this bull and bear debate. They want confirmation. And frankly, everyone is thinking just like these people. They're looking at this. Everyone's looking at this chart. They want the market to go above the November highs before they'll buy, before they'll believe that anything has changed. And nothing is going to convince most people that anything's changed. But these were the same things people were saying in 2021 when I was writing articles. I didn't know about Walter Deemer then, but I was writing articles and doing a couple videos in 2021 saying, look, the internals are collapsing. They're disintegrating. We're in trouble. Doesn't mean the market's going to top out immediately, but things are going to roll over and there's going to be a violent drop or a bear market. And people would say, oh, the averages look good. Well, now the most stocks look good, but the averages have not yet broken out. The averages are lagging. The averages are lagging the action of most stocks. For example, look at the New York Stock Exchange. If we look at the New York Stock Exchange, what we'll see is that it's above the November high. It's already done the breakout all these people are looking for. And this is made up of all the stocks. So that just demonstrates my point. The averages, the S&P, the NASDAQ, particularly the NASDAQ. When we look at the NASDAQ, we see something that is badly lagging the S&P, badly lagging the New York Stock Exchange. And we look at the NASDAQ 100 made up of the 100 most big cap, most popular technology stocks. It's not above the 200-day moving average. The indicator on the bottom of this chart is the relative strength ratio, dividing the price of QQQ divided SPX. It's still, trending down, meaning that the NASDAQ 100 is lagging the S&P 500, which is lagging the New York Stock Exchange primary index. So tech stocks are lagging. Tech stocks, there's new bull markets going on. That's not evident when you just look at S&P 500, when you look at the NASDAQ. They're happening in individual sectors. They're happening in gold. They're happening in silver. They're happening outside the U.S. stock market. If you look, for instance, at the emerging markets exchange traded fund, not only is it above the November high, it's above the August high. It's right on the June high. It's, it's like almost 5%, 5 to 8% above the 200-day moving average. This is in a bull market. I define a bear market as a market in which the 200-day moving average is trending down and acting as price resistance, which is exactly what we saw in the S&P 500 last year, and it may continue in the NASDAQ. It is likely to continue in so many popular big cap tech stocks like Tesla, which is not even above the December low or November low. It's still below the 50-day moving average. We can see bull markets break out all over the world, and then they have. We can see the New York Stock Exchange continue higher, and Tesla never get above the 200-day moving average this year. So yeah, a lot of the popular fad stocks are not going to recover this year. They're not going to be good, maybe ever. Some of them, and Tesla is probably one of them. The ARK ETF is loaded up with this garbage. Look at it. It's lagging. That relative strength line is just dying every single month. This thing is just a laggard. So I don't, but this is what everyone, most individual investors and traders in the United States, Tesla is still the number one stock they're buying. It's still the number one stock on Robinhood. They're still obsessed with the winners of yesteryear, not with the new leadership in the markets, not with the sectors that are powering the New York Stock Exchange primary index higher, which is the biggest broad-based average. The Dow is just doing incredible while all this other stuff is lagging and acting terrible. When we look at gold, which is in the GLD ETF, what do we see? We see something above the December high. We see something above the November high. We see something above the August high. We see something above the June high. We see something that is close to the May high. We see something that started a bull market in December and is completely breaking away from Tesla, completely breaking away from NASDAQ. And it's incredible. There is so much bullish activity in the markets. So yes, there is a battle between stock market bulls and stock market bears playing out on Twitter, playing out on social media of arguments, worries about can this market break out of that downtrend resistance line. But I think it will. I think because I've seen this before. I've seen leadership in sectors and global markets and even gold and silver first, and then the U.S. stock market ends up going up, and following that's what's going on elsewhere. But this is going to continue the rest of this year. The real strongest bull markets aren't in the S&P 500, certainly not in the NASDAQ. They're in other things, other sectors, other asset classes like gold and silver. If we look at a stock like copper stocks, Southern Copper, which I do own a position in, look at this. It made an all-time high just Wednesday. That's in a bull market. That's way above the December high. So these people that are just focused on the S&P 500 trend line, there's so much more to the financial markets than just what's going on in the S&P 500. So let me ask you this. The real question isn't, are you bullish or bearish on the US stock market? This is the question always put in front of you every single time you turn on CNBC, every single time probably that you go on Twitter. No, the real question is, what are you going to be bullish on? Are you going to get involved in the most bullish and most pulled up sectors and things going on this year, or are you going to continue to play in crypto, in Tesla, and these laggards? Can you focus on what's doing the best, what's likely to continue to do the best, what the big plays are now? Because when you do that, what's going on that S&P 500 and that trend line really isn't that material. It's really not that important. Do you think that matters to people that are invested now in emerging markets or gold and silver? Gold is up today. Mining stocks are up today. The sector in Tesla is just languishing. The Dow is down. I think it's still down as I'm doing this video. Focus on the new leadership, the new winners. Yes, I think the S&P will break out and surprise the people that are now bearish this year, that don't believe it, but the real bull markets are elsewhere. And I'm going to focus on the top sectors, top performing things, and because that's how you beat the market. You beat the market. You beat the S&P 500 benchmark by being focused on the things that are doing just that. So like this video, so I know you like it. And then if you're new to my YouTube, hit the subscribe button, hit the bell next to that, and YouTube will send you an alert as soon as the next video is up. And I'll be talking with you later.